Good afternoon. Welcome to Options Tender. It is Saturday, July 20th, 2024. I have important information, an important update coinciding with yesterday's video. I think it's very important. I don't think I put a good enough emphasis on what happens if tech breaks down just a little bit sooner than the full retracements that I was talking about to the 50, 60, even 78% retracements on the lower time frames. Okay, I put together a whole scenario. We're going to go through SPY and QQQ, VIX. I'm going to do some multiple time frame analysis and compare what I think might be more of a situation that might play out. It's very similar to yesterday, but there's a what if scenario. So make sure you stick around for this whole thing. This is very important because not only is this educational, but this also gives a good trading aspect as well, a little lesson on how things need to be looked at over and over from a bear bull kind of point of view. Now, if you're new here, go down to that bottom right corner, hit that Options Tender logo, and subscribe. I'm going to do this video for everyone. Clearly, there's no intraday. So, and even members, it's very important for you to check this out because Nvidia is going to be a very important aspect. And I just did a video on that, and same thing. I don't think I was cautious enough on when I described the bounce that we were going to get. Could be a steep bounce, but if it falls short, we need to know when to get out and when to turn bearish. Okay. So again, as usual, turn this up to 1.25 if you need to get through this. 1.5 if you just are short on time and you need to hear all this information because this is all compiled together. So let's jump into it. We have SPY on the weekly time frame. What we're going to focus in is this previous top here in 2022, 21 going into 22. So with this top, we described this before. We got a new high. We had a high here, and that was the high in the Qs. We got a higher high in SPY, but a lower high in the Qs. And I think that's what we're going to kind of look for in this scenario on the weekly time frame. We could possibly eke out with a back test of this channel up here top and eke out a new high very similar to this. And that's if we put on the Elliott wave picture or Fibonacci picture, it could look very similar to this. Okay, we just got there, maybe get a weak bar up here, even maybe a tail candle. Very similar to what we were just looking at. You see the resistance here? Same thing, rejected off resistance, but managed to eke out a weekly candle above there and broke down from there. So I'm going to go over to the Qs in a second. So as this last move here, it sort of mimics, you'll see, it mimics what the tech sector's doing. So this is very sloppy, very volatile. Got a nice big up move and then a huge down move, but a higher low at this point, and then a big up move to finish. So that's basically an ABC to make a new high, but on the Qs, it made an ABC for a corrective move to go lower. So keep an eye on that. And what will cause this? Well, and I'll show you on the daily, IWM and DIA are still in a bullish stance. Okay, I said that they may have topped. They still could retrace quite a bit and cause the market to move up past its previous high. And this is a weekly time frame. while the Qs bounced, allowing the market to go to new highs. All right, and I'll show all those scenarios more clearly on the daily. Let's go over to the Qs. So this is our previous top from 21-22 on the Qs. You had the high here and broke down from it. And look at that. It looks just like the SPY, except SPY made a new high here, but still it had an ABC, very volatile corrective move. And so this shows us that the Qs tech market led the way down. And I think this is going to be very similar. But look how far it retraced. Okay, so super important that retracement from the top here looks like about, if you put it right there, maybe we'll check it. It looks like 786 retracement. I know it's hard to see, but the thicker bar is the 62%, and the 786 is right above it, and that's right at the 401.98 resistance here. So huge pullback while the market made a new high. This one made a new low. So that's the gist of what I'm going to show you, but on the lower time frames, I'm going to give this kind of pathway of what it should look like for on the lower time frames, what kind of retracement we'll be doing. And it's it's really going to be all about the Qs at this point, but we're going to have to pay attention to how strong IWM and DIA are, because they could hold the market up. So let's do a couple things. Let's go in the daily time frame here. And so we're looking for possibly a breakdown of this wedge after a retracement, breakdown. And I don't know how far this is going to go, but I suspect it's not going to go as far as the Qs do. So we have good support. If we lose this support here, we have pretty good support around this 534, maybe 534. Some wicks here. It's a zone. Could be a little lower. 530. So keep that in mind. And on the daily, I want to, here we hit, this is what it looked like here, where we had the high. It's like a consolidation area. So we use that in previous videos constantly. And so we're probably going to do something very similar on this coming up decline here. So this high here, and this was a good top, but we're talking probably a major top here coming in. So this move, let me pull it out here so you can see what I'm doing. Okay, so I'm just trying to get you an idea. Drawing tool. Oh, sorry about that. I don't mean to waste your time. We want to do just the line. Okay, so from top to this initial move, so it looks, there's two bars there. There's a doji as well, but two bars basically of decline. And right now we have one. And so maybe we have another week of decline here or so. And it's about 5.5%. About a 5.5% decline on the initial move down. So what would that be here? From the top, that initial move, the box, I just want to, okay, initial move down, that's about 5.5 right there. That takes us to about the 535, just under the 535. So that's if it were exactly equal. This is a little bit more major of a top, in my opinion. So this initial move could be 6 or 7%. You know, so that would bring us into 530 at the 6.5. Just 1 more percent into the 530. So those are good numbers to keep. Let's keep 535 and 530 in mind, and all the way down to the previous high would be 525. So I know that's a big range, but this one, this first decline made it back to the previous high. So it's not unheard of. We'll see. We'll check those out and see how that kind of looks on the lower time frames. We're not doing our usual analysis. I'm not trying to jump back and forth between all the Elliott waves and stuff like that. I just want to show you these things. So made it to the previous high here. And so if we made it to previous high on the Qs, it'd be about 447 in the initial move. All right, so keep that in mind there. Now, let's go over to Nvidia. And what's happening with all these major tech stocks, they're breaking down. They're breaking these major trend lines. And I have a setup here on Nvidia, and I kind of drew it out to where, look at this. This is a descending triangle setup. So let's go down. Sorry, I didn't go down to the daily. All right, so it's a lot more clear now. Here's our initial move here, a retracement, a move. Now, I still think that Nvidia is going to get a bounce. But I think that bounce might be just a little bit less. Maybe close a gap. You know, I don't know what is going to hold the market up. We'll have to see where the relative strength is in this bounce. But maybe we just come back to the 8 or the 20 to close the gap. Get a meager bounce and drop below. So the whole point of this, and I'll show you on the Qs on the lower time frame, is that if this key point 118 breaks, whether it's going into Monday or if we get our bounce that I was talking about, which I think is very likely, we get our bounce, maybe it just comes up, 2 bars or so, 2 days, and then starts to break down from there. That's what I'm afraid of. I'm afraid this is incomplete, this move here. And so the last leg still has to happen. So maybe this just goes sideways for 2 days and allows the S&P to go a little bit higher. So I'm going to just go ahead and the important thing on the daily is just clear that this looks like a descending triangle. Okay, so you have the neckline here, and if you use you can use a drawing tool, or if you just use the line here, this would be considered a measured move. All right, from the top of the triangle down to, at the peak, down to the neckline. And then the breakdown zone. So if this breaks down, it doesn't matter where it breaks down. If it starts to break down, then our measured move, look at where it takes us. It takes us exactly to this huge support. That's massive. And we'd break down from the 50, and we'd break down from this trend line here. And that also takes us to the major trend line. So in my opinion, this is possibly setting up for a 1, 2, maybe even a wave 3, 4, 5. Maybe we get a small 4, 5 in here. And that will complete our move. And then we start looking for a significant bounce. Okay, I just don't see a significant bounce really happening here. I just want to be cautious. If it does, great. Then yesterday, what I talked about is probably going to play out where the Qs get a deep retracement and the SPY gets a deep retracement. But this is too much of a coincidence. Okay, we're going to leave this here to look back on. And this doesn't change. This measure move does not change on how high we get our bounce. It's just the breakdown. It's the measure from this point and then the breakdown to a target. It's not always exact, but that would be the target, and it just happens to come into this major support. Now, let me give you these scenarios on the lower time frame with SPY and QQQ. With SPY, that probably means we start to break down. We're going to get some sort of bounce, and maybe we even get a higher low. I don't think that's the case. We'll probably break down into FOMC and find lower lows. So it's possible we're looking for a three-wave move. And this would be an impulse move to the downside. So this would have to be counted. I know yesterday we're looking at it as an impulse move, and this is the top. That still could be. But I want to give caution. If tech leads us lower and fails much lower into certain retracements, then I think this is probably a three-wave move where we get an A, a B into a 50-60% retracement into the options expected move next week. And then we get a C wave, which is going to be a 5-wave impulse move. So on the Elliott wave and Fibonacci picture, here's what we drew out yesterday. So it's the same thing, a pullback to the 50-60%. And now I'm thinking more likely the 50%. So I don't want to hold on to too much there, because either way, whether you're a bull or bear, I still think this is going much lower. Okay, and then so now we have some targets here. This would be the 5-wave move scenario that we talked about yesterday. But this, if we get a new high, like we're talking about on the weekly, and just eke out a new high. So going into the 19th to yesterday, we got our low. So I'm going to take this curve out. We got our low on that time frame. Now we're looking for a bounce into the 723 and 724. So that's Tuesday and Wednesday. We're looking for a rejection. Sorry, somebody rang the doorbell. Had to check that out. So we're looking for a rejection in the same time frame. Nothing's changed there for SPY. All right, it's going to be a little bit stronger. We think that relative strength is going to be a little bit stronger in SPY. And we're going to get to the 50, 60. So you're going to think it's a 1-2, but this is possibly an A, B, C. Now, where does C end? It could possibly end right here at this potential. Now, if you draw this to where this is a 1-2, 1-2, then from the bottom of wave 2, we take a measurement to the top, and to get a 23.6, this is kind of giving me the clue that something's happening. We're getting a bounce that's a 23.6, which is significant if this is a wave 2 there, and we get a wave 4. Don't get lost in this if you're not into Elliott wave. But this gave me the clue. We came into the 23.6, and it would be typical to get a reaction off of it. And then your next spot for if this is a wave 4 in the purple would be that 38.2% retracement. And then you get a wave 4, and you eke out a wave 5. And then we move this over here. And that would be considered a double top. Okay, it can go further than that. That's not the target. So this would be a 3-wave move. And it would look very confusing. Maybe wave 4 here is somewhere in here. Wave 4, it looks like that we get an And then some people would say it's a 1, 2, 3, 4, and 5 in here. So you can count this many different ways always. When you look at tweets and stuff like that, Elliott wave counts are just so speculative. Different people see different things. My whole point is that you should see a 3-wave structure. You're getting a new high. And possibly if we get a wave down here, an ABC, a projected wave from that 62, from the initial move, can also make it further down to the 530. So it's still in play. A wave 4 can still make it down to the 50% retracement, which is right here. It's still in play as a wave 4, so don't think if it violates under the 38.2 that this wave 4 is not valid. It's just that it's deeper than typical. Typical would be that 382. So that coincides to 50% with that possible ABC into the 162. Now, there would be the situation. Is that the low, or do we get a new low down to that final look? And remember those numbers, 530. 530 was a big deal. So our former high here is that zero mark that we talked about yesterday at 524. If we make it down to 524, I think that's more likely that this is an impulse. Because below the 50%, that's not a wave 4. That's just not how it works. Okay? That would invalidate that. So we get a nice move to 530. And that's this former high. Remember, we talked to it could possibly get to the former high. And then I think from there we go long and look to eke out a new high here. And time frame, I think this low gets into the range of FOMC. So I think we sell off into FOMC. And what could be the catalyst? We'll have to look into Monday and Tuesday. There's probably something on Tuesday, my guess is. Tuesday, take these off. Let's look for economic event. Usually they're around 9:30 Eastern Standard Time. You have consumer confidence, existing home, money supply. Yeah, we'll have to look. I'm not sure. Could be Wednesday. PMI. It's a big one. New home sales. So I'll look into this more on what our catalyst can be when it pops up on my other calendar. But I don't have that right now. So, okay. So we're looking for a catalyst to break down from the 23rd, 24th, Tuesday into Wednesday, and then to sell off into FOMC. So nothing's changed from yesterday. But after that, do we make a new high, or do we make another low, invalidate that, and then start to retrace? So either way, you're looking for retracement at that point, deep retracement, and or a higher high. Okay, and so if that scenario plays out well, the Qs, this is what it's going to look like in the Qs. Just like Nvidia, the Qs are making a head and shoulder possible setup. So you have, and we talked about this yesterday, but if this plays out, and look at the options expected moves around 484, a little bit higher. If we can't get above that options expected move, that's a really shallow retracement. And look, this structure here, that's an impulse move. 1, 2. And I know that looks like just a little wedge, but we could expand that a little bit. And now we're probably going to make a channel from that, reject off the channel, and 1, 2, 3, 4. And the thing is about wave 5s, and this is what I'm concerned about, is that wave 5 could be devastating. this is like gaining momentum to the downside, okay? Where 5, as long as 3 is not the shortest, then this is a valid impulse move. So now if we get a nice big move here to the downside, and how would I get that? Because it's inverse head and shoulder. How do we measure that? Same thing as at Nvidia. Okay, so you have that from the top, the head, and I'm gonna leave this on here. So I want to make it a different color. So this is the measured move from the top of the head to the neckline, and then the breakdown zone. Breakdown is the neckline. And look where that takes us. Wow. Right into that previous high here. Just a devastating move there. Massive. So that would mean we're gaining momentum, and just tech really, really drags the market to the downside. So, and I mean, this is a really probable situation. Now, our only concern is when it breaks this neckline, and I mean when, because it could be a higher retracement or lower. It doesn't matter to me. Once it breaks the neckline, we're looking for that measured move either way. I'm just really concerned really about the retracement here. Now let's look on the Elliott wave and the Fibonacci's. And so I brought out the lower Fibonacci's instead of the 50-60% because tech is possibly going to lead us to the downside. So this was my biggest concern, is that while people are looking for this to close the gap up here, and then we get just this little meager move here, and that this is just our first impulse wave. Now, with SPY, it's a wave 4, and we go to wave 5. But this will be a clear 5-wave move for an impulse 1. We don't have that clarity in the SPY. So this would 1, 2, 3, 4, and a devastating wave 5, an extended wave 5 for an impulse 1. That takes us right into that 444 area, that previous high, great support. And now at that point, we'll be looking for a significant move for wave 2. And SPY should mimic what the tech stack does. So maybe we get a zigzag. Remember that big move to the upside, big move to the downside, and a finish up into larger retracements. I'm not going to go through just really quickly. I'm not going to clean it up, but let's just assume it gets down there. We'll change this, and we'll get into that. If it retraces like the weekly time frame, like I was showing on the 2021 going into 2022 high, that's the 786, and we get into that gap area. After this massive move to the downside, we have a very, and it's going to take a lot of time, a lot more time than it took to get down there. It's going to take time for a pattern. It can be a flat pattern or a zigzag would be typical for wave 2 to get up into this 786. It doesn't have to get to the 786. It could be the 481 and even lower here, 474. If time and price, we'll talk about that later, comes into it. But knowing that there's a large cycle that SPY might get a new high, then it's likely that we'll get a steep retracement into the 786 back up here. So this should slingshot this next move. If we get this grinding move down to FOMC, which is not next Wednesday coming up, but the Wednesday after. So like 8 trading days. If we get a devastating grinding move to the downside, then this is going to sling back up into some of these retracements and then dip probably hard and then get an impulse move back to the upside. So remember, we'll talk about it later, but wave Bs can be time consuming and all of this too. So that's I think that's what I wanted to get. I just was we're gonna be watching Qs like a hawk. This 50 60 is fine, but I have a feeling we're not going to get above 484. Okay, maybe we do. Maybe we get above there and I'm wrong, and it makes it all the way up to 490. But then that changes how I look at this. This would be a wave 1 here, or an A, and they both can potentially get a new high. And then, or this is a 1, 2, and we start seeing the big moves there. So this is a big deal. How far this retraces. That changes everything. But I think it's more likely the scenario that we get a shallow bounce here, and this completes an impulse wave down there while SPY just gets an ABC. All right. Now we're going to look at the VIX, and what would that look like in the VIX? So the VIX never really hit this target here. So what that would look like is a possible retracement back into that 1550, and that maybe even down to the 200, but really about 1550 while the market corrects for 2 days or so. And this starts to break out. And we should see a big move here, and possibly as the market really grinds for those few days to the downside relentlessly, we get a large wick. Okay, and that would signal that we're going to get probably get a large move back to the retracement, and then the sell-off is done. So I do think we might test these highs here, 21, 23, something like that, and then possibly wick back lower. Okay, that's what I got for you guys. As long as VIX is bullish, then we got to be bearish on the market, and so far it's in that stance. And looking at IWM, this is in a bullish stance. It's back testing. It's still above support. It's above the 8 EMA. So if this starts to bounce and or go to higher to close the gap, then that's going to pull SPY up for this initial bounce coming up Monday and Tuesday. And with the Qs, with its meager bounce, should allow this to pull the market up and get a more significant retracement. And same with the DIA. It doesn't mean that they have to make new highs. They could have their high in, but as they retrace and or make a new high, SPY should get their deeper retracement to the 50-60. And with tech, in the same amount of time, might struggle to get to that 382. And then we have to be really cautious and see what happens next after that. All right, that's what I want to show you. I know it's very lengthy, but this is super important. That's how we have to look at things. If you hold on to things thinking that we're going to close those gaps, then you're probably going to lose a lot of money, and I don't want that to happen. And so I needed to put this out there because that's how I will be trading it. I will have put protection on. As we go up, I'll be scaling out of calls. I should say it the other way around. I'll be adding in. I'll tell you exactly what I'll be doing. So with SPY, as we make retracements to the upside, and I'll be looking at Qs as well, and we start hitting some targets, I'll be scaling out of the calls into the 24th and 23rd, so Monday and Tuesday. It's very short length. I'll be looking to take off positions, and I'm thinking the 50% would be the max. And then I'll be loading in to puts with call protection just in case it goes a little bit higher. And then our calls will have to wrap around where I think our target time frame into FOMC. So I meant our puts. So my puts I'll probably have out to much later dates to beginning of August. So it covers that FOMC area. And we're not going to look to get these new lows if that's the case. We want this initial meat of the trade here going into some of our targets. So this will be the cautionary area around 540. We'll play pretty aggressive to 540, let some runners go, and then add on, switch over to more calls going into if we get down to 530, and then I'll have put protection at that point. And well, you see how I changed my mind frame when we're looking to go long, because I think this is a more likely scenario in my mind over those weekly time frames. And I don't know what the time relationships will be after there. So let's just, this looks like a good one wherever it's going to be. So this might be the high here. That might be a high. And then, do we get a higher low and go up, or make new lows? So lots of things could happen. FOMC could initially give us a bounce and lower, or it could just give us a bounce and just keep going for that scenario I was talking about to the upside. And then on the Qs, same thing. The Qs, I will certainly be watching the big tech for this bounce, take off most of my calls at the 23.6 and the 382 around 484. That's our target. This should be some sort of, maybe this can be any sort of, because I think this is a wave 4. This can be a triangle. This can be a flat pattern where we get our A into the 23.6, B, C. It can go all the way up and just barely miss the 44. If it does, I think we come back and then hit it. But we're looking for a 3-wave move here, or a triangle to complete it. I'm not messing around with all that. I'll be taking off calls into these targets, and then again wrapping around time frame my options into the beginning of August, probably like whatever the expiration is, August 6th or 9th or whatever. I'll probably have those puts there, maybe a little further, to wrap around this entire move to the downside, which I think this is a very likely situation in the 444 after this breaks down. So if you're conservative, you don't have to play all of this. You let it retrace however far it needs to. But when this starts to break down, a conservative move would be to add on puts after the breakdown. Not me. I'll be loading into puts out into the beginning of August, going up here and leaving some calls as protection. Thank you. Have a wonderful weekend. Hope this helps. We'll talk to you probably on Monday.